Hi everyone, today I want to talk about some stubborn myths that people believe about the stock market, as well as a couple other brief looks at some news around the markets, and then of course we'll get into all of the longer term charts and data and see where we're going to be going over the short and medium terms. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So first up, stock myths that everyone believes. First, they want to highlight that small cap stocks have been overlooked for a long time and they are on the sideline. We've talked about this several times on the channel, but it continues to be true. They have just not performed well relative to their peers. Small caps have been lagging, especially on the Russell here. You can see it continues to lag. We've had significant periods of overperformance, beating the S&Ps, but we're lagging relative to the capitalization of the S&Ps right now. And you can see S&P Small Cap 600 has actually done really, really well. And that is one of the better places to be. So you can see the standout isn't the Russell, it's the S&P 600, which has done well. And you're not even taking really any kind of additional risk. On the lows, you're not actually dipping lower, and on the rallies, you are going much higher, so something to consider there. Active management doesn't work in the small cap space. You absolutely can do active management. Look for those stocks that are doing really, really well and trade the higher quality stocks on the small cap side. Can be really a good place to be for those kind of skilled stock pickers. And then they say here, small cap stocks add risk to your portfolio. Again, not really, right? So even with the Russell and the S&Ps, you can see it has a little bit more risk, but when you put them together here, your risk outcome is actually not that much higher, even if you add a little bit of small caps, right? So they're saying holding large caps plus small caps gives you a relatively flat risk profile, which is why you should generally diversify your stocks across several indices. We trade the Russell and the NASDAQ primarily here, so at least getting a little bit of diversity there. And in terms of cyclical trends here, you can see typically you get a couple of years of one or the other. Small caps led for 11 years, large caps have led for 14 years, and now eventually that small cap side will take off to the upside, and you want to be on the front end of that. Another concern here is China imports falling for the first time since Liberation Day. So China economy starting to slow down. Exports dropped by 1.1% in October, flipping from that strong growth a month ago. Imports slowed sharply as well, you can see. So that is not good, right? That is very bad for the Chinese economy. Maybe we're starting to reshore things. Maybe the US economy is going to benefit from that. Definitely from a geopolitical standpoint and a national security standpoint, this is good. But tensions have cooled just a little bit. Tariffs are narrowing, gaps are narrowing a little bit. But understand that if the Chinese economy does go down, of course, that's going to be bad for everyone eventually. And then lastly here, I wanted to highlight Buffett's cash pile, as always, continues to go up and up and up. Markets are extremely expensive, and Buffett is not buying anything. Of course, he's stepping down at the end of this year, so eventually we'll just start talking about Berkshire's cash pile, but it continues to be absolutely massive here, surging to a record $382 billion in cash, or about 30% of the firm's assets sitting in cash. So if they're sitting on a bunch of cash, just holding treasuries, getting 4%, understand that there's probably a reason for it. Best investor of all time and his kind of squires are doing the same thing, right? Sitting on a ton of cash at sky high valuations, stocks driving rallies. He's showing a lot of restraint and potentially an outright warning, right? So just keep thinking about it. We're talking about absolutely massive, which is double the amount from the previous year. This is just cash sitting at all-time highs, and percent of profile portfolio sitting at all-time highs. What's he seeing now? There's a couple of deals being made, very small deals, but for the most part, they're looking at things like CAPE ratio at 40 times, not far from the peak at 44 times, which is at that dot-com bubble area. This is pretty much the same chart as the SPX divided by the M2 money supply, the same chart that we've been watching. We're very, very close to those peak levels, which is just not sustainable. We're not going to stay at these levels forever. And I've been saying this forever. At this point, it feels like the better place to be is have a little bit of cash, be able to buy stocks as they go lower. Looking at fear and greed, we finished the week at a 21, down from a 48. So really substantial move down here. You can see that big spike down, new lower low there. We're not at those levels where you can say a bottom is in for sure. You can see we've hesitated in this area before, getting small bounces, but I would say there's probably one more move down just based on this metric. Otherwise, looking at all the indicators, still fear or extreme fear pretty much across every metric. Momentum still nowhere near that 125 EMA. I think that's absolutely in play over the next couple of months. Strength, continues to go lower here. Extreme fear, breadth also going lower. It did improve a little bit on the short time frames on the Friday trade, so I am expecting just a little bit of a bounce off of that. Put call ratio continues to elevate, expecting this to go higher, probably to that 0.8 area. Volatility spiked up a little bit, but rejected off that 20 area. I think we're going to go a little bit higher ultimately, but in the short term, I did talk about I am looking for a little bit of a bounce Monday, Tuesday, and then safe haven demand still not really moving, still in fear, and then junk bonds, big spike down, but flattened out here now, still extreme fear. Moving over to the AAII survey, we are pretty much in line with expectations when it comes to those historical averages here. You can see 38% on the bull side, 37.5. Neutrals just a little bit lower, bears are a little bit higher, and I would suspect this would be closer to the more historical average. If they factored in the Friday move, I think we'll see a little bit more bullishness off of that. I thought we might see a couple of steps down, but that move on Friday was pretty aggressive, retraced a lot of bearishness, and I would expect more bullishness off of that level. So right now, I think this was a slight step down. Definitely was some bearishness in markets, but I think this will resume back to the bull side next week. Moving over to seasonality, you can see bullish seasonal period across the board. Got a little bit of some dips in there as we did end up getting this week, but those should be bought up, and I would expect this to end up higher towards the end of the week, and that is what I am trading for right now. Moving over to the calendar here, you can see it was supposed to be bullish all week, and that is of course not what we got here. So just keep that in mind. Bullishness for the Monday, bearish on Veterans Day bond market is going to be closed. Bullish Thursday for that CPI data and Treasury budget. We'll see if we get any of that data. I assume that we won't, because we can't seem to reopen the government for anything at this point. And then don't forget the following week is that options expiration week, which is relatively positive, up 14 of the last 21. And then the witching day, up 16 of the last 22. Moving over to the earnings calendar just for a moment, there are a few things left out there. Occidental, Tyson Foods. For Monday, for Wednesday, pretty much nothing. Global Foundries is out there. That's fairly interesting on the semi side. And then Disney here on the Thursday, and that will pretty much wrap it up for this earnings season. Moving over to the economic calendar, Monday, Tuesday, pretty much nothing. Wednesday, pretty much nothing. 10-year note auction. Want to see how that comes in. Where are the markets on these interest rate cuts right now? You can see 10-year has gone up a little bit, and we'll see if that follows through on this auction. Want to continue to watch that. And then CPI, haven't got any of these reads, but it is currently scheduled for the Thursday. Would love to see some of that data. The fact that we haven't gotten it this many times almost makes me nervous, like they're trying to cover up some kind of data potentially, or maybe it is all about these weird healthcare subsidies, but I want to know. And then 30-year bond auction closer to that 5%. Not a very steep yield curve, but there is at least a positive curve. And then for the Friday, GDP for the Eurozone, Atlanta Fed GDP, basically not much of anything. Moving over to max pain, put call ratio is absolutely massive at a 4.5. Total options, not a ton, obviously. This is not a third week options expiration, but look at these strikes down here at 530 and 580, obviously way below current price. No expectations that will be anywhere near that, but those kind of large put strikes can absolutely kind of skew the options market and kind of skew price. I would say this is going to be a bullish indicator here. Right around price, not a whole lot of anything, obviously dwarfed by those larger numbers. You can see 15,000, 12,000, nothing crazy, but there's definitely, even in the short, even close to price here, you can see there's a little bit more puts than there are calls, and I would say that is a little bit of a bullish lean. Moving over to the charts, looking at the SPX here, you can see obviously bearish on the week. 1.63% came down to that 9 EMA, came down to VWAP. That VWAP was there around 66.22. The low of the week was 66.31. So it came up just short of that. Didn't even come down to the trend line there. Momentum stepping to bearish, RSI stepping to bearish here. You can see this is definitely a clean divergence with that high, lower high structure. With this being a low, potentially lower low, you can see good volume coming through over the last 2 weeks, which so far has not been good, right? You had the wick rejection, kind of that pivot point style candle at an all-time high. Got the volume there, and then we'll see what happens after that. I think this is going to be more similar to kind of this here, right? Where you get a hesitation, get a sell on volume. We got the sell on volume here. I think we get consolidation for a couple of weeks, a little bit more of a broader topping pattern. Remember, markets do not turn on a dime, so I'm not expecting this to spike down immediately, but I am expecting this to kind of pullback in time, kind of sideways choppy action for a couple of weeks, similar to this top. If it is going to be a top, that's what I'm looking for. And so far, everything seems to be indicating that. And then looking at the daily charts, we've been watching this kind of structure here, dipped below that lowest trend line, did end up finding some support in there, found support at that 667.07 level, went down to that 55 EMA. That's the first touch of that we've seen in a long time. Here you can see the last touch of that 55 EMA was all the way back here in May of 25. So you can see it's been a while since we hit that level. That is definitely signaling some weakness. I thought maybe we would dip a little bit lower to kind of get this left shoulder head, right shoulder forming, get that kind of head and shoulders pattern, and then we'll see, is that the broader topping pattern? Either way though, on the short time frames, you can see big volume on that buy candle. So I am expecting a little bit of a rally here. Is it going to be more like the Google chart where we had a head and shoulders forming, but that right shoulder ended up taking us to new all-time highs? Or is this going to be a true head and shoulders pattern where this is a top? We're going to come up with a lower high, kind of around 680, maybe even a little bit before there. And then if we do get that lower high here, that is going to be catastrophic. Moving over to the Tasty charts here, we came down and hit that 8 EMA as we suspected that we would. 666.78 was that zone for the 8 EMA, pulled back, hit that level. We said we were extended, expected to sell to that level. It was a little more aggressive than I thought. We did pull back a little bit more than I thought on the Friday, but then we bounced and closed above that level as we expected that we would. Still very much bullish conditions on the weekly chart. And as long as that continues to stay bullish, you should expect that this will likely get bought up, at least in the short term, before we have that kind of broader topping pattern. And you can see what that looked like here, right? We started to drift away from that upper band, sideways choppy, got into the middle of the range here, chopping above and below that 8 EMA, and then eventually we got below it and closed below it, and then got the continuation off of that candle, which none of that has happened yet. So we would still have a couple of weeks here, in my opinion, before we get a bigger breakdown. And then looking at that daily chart again, came in, hit that trailing stop, still very much bullish conditions, pulled back again a little bit more aggressively, hit that 55 EMA on the daily chart, and then we bounced from that level. I am expecting a little bit of a bounce, a little bit more aggressive of a retracement on the Monday, Tuesday. Moving over to the NDX. NDX obviously was much more bearish on the week, 3.09%, much lower than the SPY charts, all the way down to that 9 EMA. It was a little bit more extended, hit the upper trend lines like we expected it to, pulled back to the lower trend lines like we expected it to. 9 EMA is in there, just a couple of points lower, 24,813, current price 25,059. Momentum bearish, RSI bearish, everything says maybe a little bit of follow through here, but this is still very much intact on the structure. We've hit this 9 EMA many times, pulled back to that area, and then got the continuation higher for the next 3 weeks. Are we going to get another iteration of that? That is the big question, of course, but this could absolutely go either way. If it breaks down, obviously bad. 21 EMA would be your next support, which is about 4.5% lower. But as long as that 9 EMA holds, then we're probably in good shape for a push back towards that upper band, which would give you about another 5% higher. So could go either way at that critical junction at the trend support, but similarly here on the Q's chart to that SPY chart that we talked about, 55 EMA was your support, nice volume coming through on the retracement. Didn't finish all the way bullish here, so the SPY was a little bit better. Tech was leading us lower during the session, but I think we can get a little bit of a resumption. We didn't hold this previous high, which is a little concerning, but you still have a low, higher low. 55 EMA was support at 598.53. Trend support in there as well, touched that trend and then bounced and then finished almost positive, and it was drifting higher in the after hours. You can see that after hours price is actually 612.14, so it's above that level. Expecting this to have a little bit more bullishness into that next session, Monday, Tuesday. And then we'll see, do we get the continuation through everything? We flip back to bullish conditions, or is this going to be another lower high in here? And then we get the bigger continuation lower. So that's what we're watching for right now. I would say this is bullish. Moving over to the Tasty charts here, you can see that same setup on the daily chart, hitting that trailing stop. That was what we were watching in there at 608.87. If we were to close below that, that was going to be a very different technical situation, but we did close back above it with the aggressive push on the Friday after that dip. And then looking at that weekly chart, super aggressive to the downside back to that 8 EMA 605.11 was the level, closed back above it 609, and then like I said, we did drift higher to 612 or so, about another 0.5% higher in the after hour session. Trailing stop still all the way down at 569.23, so of course still very much bullish conditions on the weekly chart. Moving over to the Russell here on the weekly chart, down 1.88% on the week. That's down 2 weeks in a row. Momentum continues to fade. RSI continues to fade. We haven't hit that 21 EMA yet. That is down there at 232.06. Closed middle of the candle, not a ton of volume. Want to see VWAP continue to hold at 240. Either way, though, this continues to look like a topping pattern. We're still being patient, waiting for these to catch up. Probably mid December on the weekly chart, the 21 EMA will catch up, and then we'll have that 55 EMA currently down at 221.45. That is the current support if that 21 breaks. But again, 21 is support right now, 232, and that'll continue to drift higher here over the next couple days, couple weeks to couple months potentially. And then once that catches up, then you'll see something like this, right, where we have a little bit of a pullback. 21 EMA is resistance. Get that sell off of that area, and that is usually the indicator that markets are going to be moving lower in the near term. So far, none of that has happened. And then watching these levels here, we've been watching this as a topping pattern. You have a high kind of double top here, bigger sell. Got this kind of midpoint at 241, did close above it after dipping lower below that 55 EMA here. Closed bullish on the Friday. Momentum is still bearish, RSI is still bearish, but look at the volume, really, really nice volume, big retracement, kind of outside reversal day to the downside, which means we should see a little bit more bullishness to the upside. If we come up here, hit that 21 EMA at 245, hit that zone and reject, that's going to be catastrophic. But I think we still have a couple more days before we start to see that bigger pullback and then the consolidation on that weekly chart. So either way, still looking for a little bit of bullishness on the short time frames. And then looking at that weekly chart on the Tasty charts here, you can see that 8 EMA, we did close below that. That was at 242.18. We closed at 241.60. So that's the first time we've closed below it since back here in July. We did close below it here, and then we did get that continuation higher. You can see that upper band continuing to kind of drift away. We drifted away from it the last couple weeks. We're still kind of holding in this zone. That's why I still think this is kind of a topping pattern. That is usually what we see, and we talked about it before, right? Where we start to drift further away from that upper band. This levels out, the band will level out, and that will start to become resistance, and that is starting here on the Russell. And then looking at that daily chart, same kind of setup, the same setup we're looking at, right? Hit the upper band, drifted away from it, second band resistance, didn't quite get there, came up short, and then that was resistance, right? So continues to show weakness. Eventually this will break down. Your trailing stop there was at 236.56, came down, tagged that level almost to the penny, and then bounced bullish, closing above that 55 EMA. So far, still holding structure. This could just be a consolidation for a continuation higher, but this is starting to look more and more like a topping pattern to me. Moving over to the Dow. The Dow continues to march along within this trend structure, hit the low of the trend structure, bounced off of that 9 EMA area at 464.93. The low of the week was 464.86. So overthrew it by a couple of cents. Buyers came in, pushed it back up on the Friday. On the RSI, we're right at that SMA, still low, higher low potentially. You still have a little bit of divergence on the high there. So it is slowing down, that is for sure. We had the wick rejection, got the confirmation candle down, similar to this structure. Ultimately went higher here. If we get that continuation push, that could give you kind of 3 to 3.5% higher. Hit that upper trend again, and then we'll see if this starts to break down or not, or is this a broader topping pattern? You can see this volume has been ramping as we get to that kind of peak area. Usually when volume is ramping and price is kind of hovering in here at all-time highs, that means there's some profit taking happening, at least in my opinion. And if there's profit taking at all-time highs, eventually we will see a pullback into cheaper prices. This has been basically straight up here since April. So we've had many months of straight up price action, and it wouldn't be shocking to get at least a little bit of a retracement. Moving over to the equal weighted S&Ps here, you can see sideways choppy action since middle of August, and that is no change here today. 21 EMA already caught up at 186.43. It was down about 0.2 on the week at the lows. Similar to everything else, we were closer to 1.3% lower into the same kind of region here. Momentum bearish, RSI bearish. Equal weights are not doing well. This has been a topping pattern for a while. Eventually this is going to consolidate and drift down, as we've been watching kind of on this chart, as well as the IWM. Eventually this will start to pull markets down, but for now, this is still a topping pattern. Next dynamic support would be this 180 area, 179.94, 55 EMA there as well at 180.33. Moving over to the ratios here, this was not great for the NASDAQ. You can see down 1.48%, fully engulfing that previous candle. 9 EMA was support once again at 3.71. We'll see if this zone holds. We're going to be watching this one this week. This looks pretty much like a reversal. You can see momentum stepping down. You got clear divergence on your momentum, much higher prices. This is looking like a top here, at least in the short term. We'll see how much of a fall we get out of it. Again, that doesn't mean short term we can't see a little bit of a push, which I do think is possible. I think we're just a smidgen oversold, but on this weekly chart, on that kind of medium time frame, this is continuing to look like the early stages of a reversal. And then looking at that SPY Russell, you can see SPY did outperform just a little bit, not a whole lot, but momentum continues to swing here. RSI continues to swing here. Are we going to get a little bit more SPY outperformance? Does kind of look like that over the next couple days. Moving over to the SPY divided by that M2 money supply, we pulled back right to the level 30.14, overthrew it pretty substantially. 9 EMA still support at 30.13. If we dip below that level and close after closing above it here pretty substantially the past couple of weeks, I think that's going to be very concerning here, but you can see that same setup, momentum fading, RSI breaking below the SMA there, clear divergence on that most recent RSI peak, clear divergence from here as well, continuing to show that weakness relative to the previous highs. So just consider that, continue to watch it. This is a very slow topping pattern. I'm not sure that the high is in quite yet, or if we're going to get this sideways consolidation pullback in time still. But either way, there are continuing to be early signs of a top coming in. Moving over to Apple and Microsoft. Apple hanging in there pretty well, down 0.71. Inside candle, still very much parabolic on Apple. It's continued to look really strong. Got a slightly lower high on the chart versus that previous wick high there. Momentum stepped down a little bit, pretty much overbought. This might be kind of a near-term top. It's not impossible that this kind of continues to be parabolic. Apple still looks really good and it overperformed relatively. And then you can see Microsoft, this just looks awful, right? You got two very clear wick rejections at a level that we have on the chart. Clean, two big bear candles on massive volume, momentum bearish, RSI bearish. Looks like this is going to go to that kind of 466 area once this zone breaks here. Everything says this should be pulling back. Don't forget there are a bunch of gaps here on the daily chart that are left. Microsoft just seems like it is very expensive, clean top. I would be pretty bearish here on Microsoft. It's not impossible that it holds up similar to NVIDIA, where there's just not enough people willing to sell it. They're going to hold it at these levels. You get a long pullback in time before a resumption. It's not impossible, but this chart does not look very good. Moving over to Tesla and NVIDIA. Tesla was down 5.92%. And then you got NVIDIA down 7.08%. Big sells there, fully engulfed that previous candle. We had this kind of short-term trend line we were watching. We came right to it the previous week, overthrew it briefly, got a lower high, and then sold off, closing well below the body of the previous candle. 9 EMA and VWAP in this kind of zone we've been watching here. 180 to 184 has been support, but momentum stepping to bearish, RSI stepping to bearish. Looks like we could see a little bit more sells here on NVIDIA. Of course, this is NVIDIA, right? You can see just how shallow these pullbacks have been. This is what I was talking about, where you just have very shallow pullbacks, somewhat of a consolidation, continues to kind of drift higher here. And you could absolutely see this accelerate to the upside. Would not shock me at all. NVIDIA just continues to be an absolute monster. And then looking at Tesla here, structurally, this doesn't look great, right? You have a kind of high double top in here in this kind of same zone of resistance. Every time we tag my alert here, that seems to be a zone of resistance. We had it there at 472.12, which was an important level back here. Could not get above it for any length of time, sold off. Same zone of resistance here. Looks like this might pull back a little bit. What I would like to see, honestly, is this pulls back to kind of 350, this previous high here, 350, 355 in here, and then test that level, higher low setup, get a nice buy off of there. You could see this absolutely rocket to new all-time highs there. If we did get a substantial pullback into the zone like that and it held up okay, that would be fantastic. But in the short term, this is still looking like a very long-term double top, in my opinion. Moving over to Meta and Alphabet. Meta continues to look terrible, down another 4% here. This has a long way to go, in my opinion. I think Meta is going to be in trouble for a while. This looks like a very broad topping pattern, right? You came into this zone beginning of June, middle of June timeframe, and we broke down here towards the end of October, you saw all of the same things we've been talking about, right? That 21 EMA catching up, testing that zone, overthrew it, hit some clear trend resistance, and then you get a massive down candle, down 12%. Now we're down into the 620 area. I think this could go even further. Honestly, I think it would not surprise me at all if this fell all the way down to 489, back towards these April lows. They did have a one-time charge off, but I just don't think they are maintaining the same kind of growth that they had in this previous earnings, where you had a massive extension, massive continuation, and now we're starting to see sells. I think this will probably bounce a little bit in here around 555 to 564. That would be interesting. Come in here, test that area, and then get a lower high, and then continuation to this area here. But either way, massive bearish momentum, massive volume on the sells. I don't think this is going higher for a little while. Your next dynamic support is all the way down here at the 144, which is sitting all the way down at 483.50 on the weekly chart. Alphabet, very different story, of course. This looks more similar to Apple. Both of them did really, really well. Almost the same percentage as well, down 0.75%. Inside candle, momentum fading, definitely extended, but can't argue with this. This is continuing to be parabolic at all-time highs. Moving over to Amazon and Broadcom. Amazon finishing almost unchanged on the week, up just 19 cents. Obviously a new all-time high on the Wix. You can see got all the way up to 258 or so. Absolutely massive there, pushing through all these previous resistances, which was your all-time high previously. You can see going all the way back to 2001. That was down here around 200, 190 or so. Previous high here in January this year, and then we rocketed through there on earnings. Absolutely massive for Amazon. AWS continues to do super well. Had this trend structure in here, didn't quite get there. Momentum is still bullish, RSI still bullish. You can see good volume on those pushes, but continues to sell a little bit here. Not doing super great, super extended, of course, off of those EMAs as you would expect. So I would expect a little bit of a pullback, but on a relative basis, Amazon's doing really well. So out of the Mag 7, Amazon, Google, Apple seem to be in the best shape technically. And then looking at Broadcom briefly, pretty much in line with what we saw from NVIDIA. They moved together very similarly here. New all-time high wick on 2 weeks ago, and then the close here today. Here this week down 5.5%, engulfing the previous candle. 9 EMA, VWAP still that same support area between kind of 337 and 345. That's your zone of support. If that breaks, 21 EMA down there at 313, my level 321.70. Momentum stepping to bearish, RSI stepping to bearish. Volume has been falling here at these all-time highs. Had the really strong push here, good volume on that ramp. Held the structure as you would expect, but then we faded here, and that looks a lot more bearish to me now. Moving over to staples and discretionaries, you got a clear risk-off style week. Finally, we got a little bit of new information here. Risk-off staples were up 0.5% after dipping to 75.40. Buyers coming in that area as we kind of expected that they would. That pushed us back above the 200 there at 76.94. We said don't get bullish on this until we tag that level, and we did tag it, and then buyers did come in there. So momentum didn't step with it. If we can get a confirmation candle similar to what we got here, maybe we can finally get some follow through on this bounce. I don't think this is going to crater by any means. We said anything really below kind of 74 to like this 68 area, I think is a nice buying opportunity. But right now we're at the highs from this consolidation pretty much throughout 2022. Could absolutely go lower. Like I said, it's not in the buy it with both hands zone yet, but in the short term, I think we'll see at least a little bit of a retracement back to the upside. And then looking at discretionaries, this continues to look like a topping pattern. Previous high here, double top here. Looking for this to get that bigger breakdown. 21 EMA still has a little bit of time to catch up over the next basically month, maybe 6 weeks or so. And then once that catches up, I'm expecting this to break down a little bit more. Moving over to Breadth, you can see Breadth actually was pretty good on the week. This is why I think we're going to see at least one up week here, probably next week. Breadth hung in there really nicely. I would expect at least one more up candle back to back here. You can see previously up candle, follow through candle, up candle, follow through candle, up candle, follow through candle. So I'm expecting a follow through candle on this next one, and then we'll see if that is kind of the peak area. Right now, you have a push towards that RSI. Really on both charts, you can see these have been struggling. They continue to downtrend, but in the short term, you got kind of a low, higher low, expecting this to push to that SMA, maybe overthrow it a little bit, and then we'll see what happens after that. But either way, short term, I think we get at least one more up week, stay bullish next week, and then probably the following week we'll get a bigger drop down. Want to see that critically low level so we can kind of call for a bit of a bottom, but that could be pretty painful, and I don't think we're there yet. Moving over to the 200 SMA, this continues to be very similar. We did dip lower, so you got a lower low there, got below the 50 line for a minute. Don't love that. Momentum still bearish here. Did close positive on the week, just barely 54.07. The close the previous week was 53.67. So we did close slightly higher. Again, still expecting a confirmation or a continuation candle here to the bull side, and then this structure will probably take over with this high, lower high structure here, expecting a kind of low, maybe double bottom in here, somewhere in there. If this goes all the way down to 15, that's going to be pretty surprising. I don't think we'll go anywhere near that low, but in the short term, I think we'll definitely see more lower lows. Maybe 36 is in play. That's been a critical point before. You can see back here, March of 23 and then May of 23, lows in there. Got nice moves to the upside after that. Would love to see a touch in there, maybe as low as 24. That seems a little excessive without some kind of news catalyst, but for now, confirmation candle up, lower high setup, continuation lower, looking for that critically low level, and then we'll definitely stay bullish from that period. Moving over to the dollar did reject from that area that we were a little bit concerned about, 99.83, the 200 SMA on the daily chart was also in there, but you can see this is a clear bottoming pattern. 21 EMA caught up, great setup, tested those areas, 9 EMA held, bullishness to follow through. I think this is probably just a hesitation here. I think we'll get a higher low setup continuation over the next couple of weeks. I think the dollar is going to go higher for a while. Momentum still very much bullish, RSI still very much bullish, just waiting for this to kind of rocket out here. Structurally, this is still very, very bullish. Of course, you got kind of interest rates hanging over the dollar's head with the Fed cutting. That does put some pressure on the dollar, but even with that, you can see how bullish we've been, even with those cuts. Moving over to bonds. Bonds were pretty terrible on the week, 0.65 and 0.8% respectively. Coming down into those zones of support, momentum bearish, RSI bearish. You can see retest of the SMA sold off. You would expect continuation on that. We'll see 55 EMA support 96.26. If we don't get the confirmation down on this next week, that could be pretty bullish. Maybe a higher low setup on the RSI, that's possible, but everything says this should go lower. And if it does continue to go lower, that of course is going to be quite bad. And then you can see TLT on the other hand, you got a level here, 89.16, zone of support in here, VWAP, 55 EMA also support 88.70. This could have sold more. 21 EMA is still support in here. You can see I have an alert at the 21 EMA. If we dip into that area and it holds, that's going to be super bullish. So I'm going to be watching for that at 88.30 or so. 21 EMA right now is 88.21. We'll see how it steps up next week. Momentum still bearish. RSI, it's right at the SMA, just barely below it here. Structurally, this is still bullish. Want to see it get back above there and get that continuation up. Still really believe this is going to go to kind of 101 to 102 area. And structurally, it's kind of similar to the dollar, right? You can see it's still holding a higher low, but we had a pretty clean rejection from that area and we came up short of the level, which I didn't love, right? You can see this clean level here, touched it, pulled back, closed right on top of it, pulled back, right? So this is a clean level, 92.82, didn't tag it like I wanted to. Would have felt better if we tagged the level, pulled back slightly, and then got that into this area here like we are now and then push through. I think would have been more likely, but we came up short. Looks like a high, lower high structure now. It doesn't look as good. Looks more like a potential consolidation, but I still think there's a possibility this goes higher. And I think it will eventually, but timing is hard. Moving over to volatility here, you can see volatility did go higher on the week, nearly 10%. High of the week was in here around 2250. Didn't get to the 28 area like I thought that it would, and it still could go. You got 2 bullish weeks in a row. Still momentum bullish, RSI still bullish. And remember, I'm really only looking for 1, maybe 2 weeks of continuation to the bull side for equities, which means this pulls back, maybe consolidates for a week or 2, and then gets that bigger push, which I do think is going to happen, right? So like I said, timing is hard, but I do think slightly bullish for a week, maybe 2, and then this will spike up to some pretty critical levels, 28 at least, maybe even higher than this previous high, which means equities will be quite bearish after that. Moving over to my accounts here, you can see I was down about 0.6 on the week, which of course was pretty good considering the NASDAQ was down about 3%. I was pretty prepared for that. I had a 610 call on for originally the Monday, and I took almost all the profits on that, so that covered nearly all of my losses. I really should have held it. Pretty much closed right at my number and would have been in a good position for the Monday, which continues to be bullish here. You can see we're at 612 in the after hours. For the Friday, continues to be bullish there. I'm a little bit less bullish than I want to be, right? 605 now for Tuesday for $8 credit, so that puts max profit at 613, just past 613, which we're pretty much already there. So a little bit frustrated by that. The bounce was more aggressive. I was not really ready for it, and I wasn't paying as close attention as I should have. Kind of had the inkling to go a little bit more aggressive to the bull side, and I just didn't do it. So that was frustrating. Either way, though, not terrible to be down only 0.6 on a week where the NASDAQ was down 3%. So outperformed that. Just going to try to maximize my movement to the bull side. If we see an aggressive Monday, I might take these calls off and then kind of let it run and then see where we start to get some levels for potential resistance this week. And then looking at the Russell, same kind of setup here. 239, we're already here, basically unchanged in the after hours. 239 for $4 credit, so my max profit there for the Tuesday is going to be 343. So I got a little bit more room, about 1% to the upside on that, which is pretty much where I wanted to be. It's just the NASDAQ was way more aggressive. It's kind of hard to make adjustments when the moves are so aggressive. And then the dollar, no movement here, still in the money. I think we're going to get a bigger continuation on the dollar. I still am bullish dollar, but we're starting to get close to that strike, to that expiration date. We're within that kind of 45-day time period. Didn't put a ton of money in this. We'll see, but still bullish dollar. So like I said, pretty much bullish across the board in the short term. Let me know down in the comments section what you think of small caps. Are they in your portfolio? Are you going to add them? What do you think about China slowing down their economy? What does that mean for the global economy? And then what do you think of Berkshire's cash pile? Nearly $400 billion in cash. What does that mean for you? Are you following suit with about 30% cash? Let me know what you think. And then, of course, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.